I appreciate you all being here. If you want to let us know in the chat where you're chiming in from, we would love that. All right. Well, let's get started just so we can get to the good stuff of today's session. Welcome, everyone. Thank you so much for spending your time with us today. My name is Sarah Dewar, and I am here to get you started on our session about financing your MBA with our lovely friends of Forté at Juno. Before we do that, I want to welcome you officially to our community. If you are back again, welcome back. Thanks for coming and being loyal community members to us. If you're new here to Forté or Forté events, just to give you a quick overview, we are fueling the future of business, helping you along your journey to and through business school. Forté as an organization works with leading business schools, companies, and then a lot of community members, about 125,000 community members and growing, to help make the MBA a financial reality and to make it more accessible and to help you with that career growth. I do want to invite you to a few upcoming events we have, whether you are looking to apply this January, or maybe you're a little bit more MBA curious, if you will. We do have a forum coming up on December 5th. This will be a great way virtually to really understand the impact an MBA can have, to network with individuals within our community, and also get a chance to talk firsthand to admissions committee members, as you maybe want them to have a face with the name that's going to come through on your application soon. Speaking of applications, if you are looking for some assistance in building your best MBA application, our flagship MBA launch program is here to do just that for you. We want to help you through this process. Right now, there's two different options you're able to enroll in. One is ideal for folks that are looking to apply in this current application cycle. So if you're looking at January deadlines, you are looking at your application and you're like, okay, this is good, but I really want it to be great, I would strongly encourage you to check out our MBA Launch Hybrid program. This is a 7-week long program, again, looking to take your application from good to great. If you are in the earlier stages of the process and you are just new to MBA and maybe feeling a little overwhelmed and you have more time in your timeline, definitely check out our MBA Launch Cohort program. This is an 8-month long program. We work together on a weekly basis. There's typically about 500 to 600 folks in that community helping you build your best application for a future application cycle. So again, if you're applying right now or looking at January deadlines, MBA Launch Hybrid should be a good option for you to check out. If you are applying in a future application cycle, maybe fall 2026 to start in 2027, definitely check out our cohort program. In addition to those two opportunities, we do also have many webinars, just like you are here with us today. So a few upcoming options, you are welcome to scan that, register for those sessions. Just as an FYI, all of our sessions are also streamed on YouTube. So if you miss a session or you want to go back and see what we've talked about in the past, you're welcome to find all of that content there. If you have questions about anything that I have chatted about today, please don't hesitate to reach out to any of us on the MBA launch team or the pre-MBA team at Forté. We are super happy to help answer questions that you might have. But with that, I'm going to go ahead and turn it on over to our friends from Juno, and the floor is yours, gentlemen. Thank you.
Thank you, Sarah, so much for the wonderful introduction. And it is always amazing to see the amount of quality stuff that Forté is able to accomplish and put forward. Pretty incredible. That's why we love partnering with Forté. My name is Nikhil. We'll get into introductions in a second. Andrew, if you want to say hi. I'll go ahead and start sharing my screen here. We have a good amount of material prepared in terms of presentation. Is that visible? I'd also love to do a quick test of our Q&A system. Could one of the folks in the audience ask any question that comes to your mind, or just say hi through the Q&A system? Don't everyone go all at once. Awesome, amazing. So we know the Q&A system works. You know what? We'll get your question. Not super focused in scholarships in this discussion, but happy to chat about scholarship and scholarship availability in general. Um, awesome. So let's go ahead and get started. Any other housekeeping things, Andrew, before we get going?
No, I think we're all set.
Awesome. All right. So we'll do quick intros. We'll talk about budgeting, which is sort of a key component of getting your MBA experience right. We'll talk about student loans for a second. A large portion of folks who go into business school do require some amount of student loans. And we'll talk a little bit about what we are doing to make those student loans as affordable as they can be. So that's kind of the plan today. We love questions. Please ask questions as they come to your mind. You don't need to wait for a particular topic to show up, etc. We might not answer your question as soon as it shows up. We might reserve it for a little bit later. And towards the end, it's just totally open Q&A. So I'm sure we'll have some time at the end to just make it a much more of a discussion and answer any open questions at that time as well. So we'll go through questions at the right time, but please feel free to ask your questions as soon as they do come to your mind. All right. So my name is Nikhil. I went to University of Illinois for my undergrad. I did aerospace engineering, went to Boeing, did that for about 6 years, then went to business school and started Juno really in the process of figuring out how to pay for my own MBA. Andrew?
And my name is Andrew. I just joined Juno, as you'll see. But before that, I did my undergrad at Boston College. Spent some years in the world of sports before doing my MBA at UCLA Anderson, and then jumped into the world of venture capital or venture-backed startups at Fourth Wall Medify before now finding my home at Juno. So excited to chat with you all today.
Glad to have you, Andrew. So I wanted to share a quick background on Juno as well. We've said Juno a couple of times. Juno really began as an experiment to reduce student loan rates for myself and the incoming class at the time. This was, back in 2018, so it's been a few years, you can tell. And it was kind of, this naive attempt. My background was aerospace engineering, nothing to do with student loans, but it was massively successful. We ended up saving each person on average like $13,000-$14,000, and we've been able to take that experience, convert it into Juno, a company, and do that year on year for the last 7-8 years, right? And today, across most MBA programs, Juno is the number one way to get your student loan. We'll talk about Juno's strengths and why this has come to be. But over $1 billion in student loans, and really, if you're speaking to students currently on campus, 1 out of 2, 1 out of 3, 1 out of 4, depending on which campus, is utilizing Juno. The great question from Shaista in the chat: is this only for US business schools? I'm an Indian student looking at LBS and INSEAD. So I should have paused at the top of this call. The first section of this discussion is geared to anyone going to an MBA program. The student loans section specifically is more geared towards either US citizens or international students with a US cosigner, regardless of where they're going for their MBA program. So they might be attending an MBA program at LBS or INSEAD, or a US-based MBA program, right? So as we get into the nuances of certain discussions, I'm happy to share, like, okay, this doesn't really apply if you are an international student without a cosigner going to LBS, for example. This discussion has not really been built for that, but we're happy to have these conversations. Feel free to book one-on-one time with us. Andrew, if you don't mind, share a link in the chat of like our general MBA one-on-one page, and we're happy to take those conversations offline. Awesome. So in terms of budgeting, let's jump into that discussion. And this is really global. This applies, regardless of where you are, which exact program you're going to, right? Some nuances, but generally speaking, yeah. So one thing we suggest is, a lot of folks start their analysis on MBA cost when they're looking at the website of the school, right? Which puts some like cost of attendance kind of numbers, kind of like this chart here on the left side. And what we suggest thinking about is you kind of really want to build your own estimate, right? So first thing I'll say is it possible to have a great MBA experience with the exact budget that's outlined by the schools? Absolutely 100% yes. Plenty of people do it exactly in that way. Um, that being said, a lot of business schools have a substantial social component, a substantial travel component, and the costs associated with that component is not fully baked into the cost of attendance published by the school. Ultimately, the school looks at it as what are the required expenses for you to have a strong academic outcome, right? The social life aspect of it, while they certainly cater to it, it may not be baked into the cost of attendance fully. So on median, we like the median person attending certain programs tends to spend a little bit more than the cost of attendance. By really I'm really saying a majority of people are spending a little bit more than the cost of attendance published by the program. So it's really important when you're thinking about this to think about it from the perspective of I need to build my own budget, right? This is just a starting point to help me ballpark like tuition, fees that are actually paid to the school, things like that. But housing, food, transportation, those are really, really things that are individual to each person. And you might spend a lot more than that. You might spend a little bit less than that. But on average, people are probably spending a little bit more than that. Now, so we have a couple of tools to help you with this. The first thing is a spreadsheet. So if you go to this link, juno.us/MBA-estimate, it's just a spreadsheet that helps you think through the various categories of expenses. We also have a column in there called multiplier that helps you think through stuff like, oh, I have income, say from my internship, but I'm probably going to be taxed on that income. So to make sure you don't forget about things like, hey, I have to save some money for taxes and things like that, we have a little bit more guidance in that spreadsheet. Oftentimes people do this exercise and they come out with it saying like, okay, I'm going to need X amount of loans. One other thing we encourage you to do when you do this exercise is think about what's your cash position as you graduate. Um, and this is certainly a luxury. In many, many cases, you're utilizing, you might not have substantial savings coming into the MBA. So you should certainly not expect to come out of the MBA immediately with substantial cash savings. But if you are fortunate enough to go in with some cash cushion, you want to try your best to maintain at least some portion of that cushion because it can be very easy to spend a lot of money during business school and just doing some planning, putting some money aside so that you graduate with some amount of a bank balance ensures that um, is just a little bit less stressful when you graduate, right? Especially if in the year you graduate, there's a tight job market or something like that, it takes a few extra months to get the position you want. These kind of things can be invaluable in those situations, right? One of the questions we often get when I talk about like building your own estimate is how much travel is actually involved, right? Like I keep hearing this thing, people are going to travel a lot. So what Juno has done for 2 years, it's a little bit dated, but not that dated, 2023, 2024, we did a survey of our audience and to understand how much are they traveling. So I encourage everyone to check out this guide. I'll open it for a quick second just to demonstrate. Is everyone able to see the guide? Like a website? Okay. So, we survey pretty extensively to understand like how much people are traveling, how much are they spending on those travels, first year versus second year, each trip, how much it's costing, whether it's for recruiting, whether it's for, like an international leisure trip. So there's a good amount of, call it information that comes from this that can help you understand like, okay, I think I am going to do XYZ um, amount of travel. So hopefully that's helpful in figuring out exactly you know what's a good conservative estimate for you to plan for during your business school um, time. I'll pause there for a second. Um, Andrew, do we have any questions that relate to budgeting that we should perhaps dig into now?
No, only questions about Canadian residents attending Canadian University, but I think we covered that at the beginning. And I guess we'll dive deeper into it towards the end.
Got it. Yep. Um, okay, so with that, we'll switch gears a little bit. We'll talk about student loans. As I said, a lot of times at the end of this kind of estimate exercise, folks feel like they need to they need some amount of student loans, right? The student loan process, if you've been through it in undergrad at a US college, it's pretty similar. Once per year, usually in the summer, assuming you're starting in the fall, you'll want to figure out how much you want to borrow. And we have a few slides to talk about really how to triangulate how much you want to borrow and then where you want to borrow it from. So we'll talk about the options you have in terms of where you could borrow it from, and then complete the process associated with where you've decided to borrow from. That's kind of the process you do once per summer. There's no way to really do it at the start of a program for the full year. There are ways to do it, once per semester, but once you understand the intricacies of how student loans work, you realize that there's not really an advantage to trying to do that. In rare cases, there might be an advantage, but in most cases, there is not. So the other thing I'll say is a lot of times um, the loan amount tends to be a pretty stressful topic in terms of like getting it exactly right. We encourage you to not think about it that way. You can increase the loan amount by essentially applying for a new loan even in the middle of the semester if you need to, and vice versa. You can decrease the loan amount if you feel like you've borrowed too much. You just log into the lender's portal, prepay. None of the things we're going to talk about today have any, call it origination fees. There's a federal loan that has a registration fee. We'll point that out. But in general, there's a good amount of flexibility with these loans. None of them have any prepayment penalties, certainly. So the structures of the loans generally lend themselves to being a little bit more flexible. Okay. There's a question over here, so we can address this question. Do you have any plans to extend it to international students without US co-signers somewhere in the future? Yeah, so I can share, Juno as an organization has tried for 4 or 5 years to figure out how can we create a more competitive option for international students without a US co-signer. We have not succeeded in that, and candidly, if I'm speaking frankly, I think the industry is going backwards, right? Options that have existed previously sometimes are going away. Um, it often tends to be a university by university discussion for international students without US co-signer. There are a few options that we can talk about. They tend to be pretty expensive compared to data I'm going to show later in this discussion. There are much better options for internationals with a US co-signer. As far as Juno, the deals that Juno negotiates, oftentimes international students with a US co-signer are treated exactly the same as a student who is a US co-signer. So in that sense, they can qualify for very, very attractive options compared to what's available without a US co-signer. And again, the discussion really starts once we kind of know which school we're talking about, and then based on the school, we can figure out what are the options available. Cost of attendance and maximum loan amount. So earlier, one of the discussions we had was, hey, here's the cost of attendance, and you might be spending a little bit more than the cost of attendance. The second thing I'll say is the maximum you can borrow through any student loan, private, federal, whatever it is, if it's called a student loan, is the cost of attendance minus any other scholarships you've received that the financial aid office is aware about. So ultimately, what this means is if in your budgeting exercise you decide you need more funds above the cost of attendance, that those funds above the cost of attendance has to come from a source like your own savings, selling stocks, borrowing from friends or family, or a gift from friends or family. Those are the kind of sources of cash that can help you manage expenses above the cost of attendance. Loans and scholarships are not going to get you there. What I'll also add is the cost of attendance published on the school's website is not like the true number. Think of that as the starting point. If you truly have needs that increase your cost of attendance, you can talk to the financial aid office and explain to them, hey, I understand this is the cost of attendance for everyone else, but my cost of attendance is higher because of XYZ reason. And that can allow you to increase the cost of attendance for you and thereby allowing you to borrow more if you need it. So that's just something to keep in mind. So as you're figuring out the loan amount that you do want to borrow, we kind of touched upon this, but a frequent question we get is, hey, how much of my cash should I use, right? And that's a very interesting question because on one side, the less you borrow, the less you're going to pay in terms of interest, right? On the flip side, the costs of not having cash sometimes are very, very expensive, right? So that's why we generally encourage folks, the phrase we use here, right, is don't plan to be broke at graduation, right? The reason for this is you don't know exactly what the job market is going to look like at graduation. It might take you a few extra months to land the exact job that you would like. And having that bank balance gives you the flexibility to say no to the first offer that comes by that might not be the best one for you. The second thing is, and this is when we're talking about much more sizable amounts of cash, like $50,000, $60,000 onwards, there are certain career paths that you might get exposed to during business school, like creating a new business or buying businesses. And if those become attractive opportunities, those are sometimes there are ways to do these kind of things without any money. That being said, the ability to do it more effectively and get a bigger portion of the upside of doing those opportunities is often done by having a little bit of skin in the game from your own pocket. So again, these are things that matter a lot to folks who have that kind of saving balance coming in. So it's something to consider. We encourage you to save at least a little bit of it and not deplete your entire balance as you are trying to save money on borrowing less. I see a couple of questions here about executive MBA. I would say from the student loan section that we're getting into is the same really oftentimes for executive MBA. The budgeting discussions are quite a bit different, especially depending on how you're pursuing that MBA. Oftentimes you're you know either full-time employed or it's a summer version, etc. So it kind of depends on the format. But generally speaking, the loan options that we're going to discuss are available for executive MBAs as well, and plenty of people use Juno for their executive MBA programs. I think we are seeing more and more people use Juno for their executive MBA programs. as we see sometimes companies are not, the size of the class that's company sponsored might be getting smaller compared to the size of the class that's self-funding their executive MBAs. The other question we often get, and we really see these two questions kind of hand in hand because it's very easy to go from stocks to cash and cash to stocks, is should you sell your stocks to pay for business school? And so what this slide is really trying to address is um, the opportunity cost of investing in the stock market. One of the first things we encourage you to think about is like if you have a stock portfolio that's appreciated a lot. For example, you might be working in a tech company or a different company that's giving you stock compensation. You've been there for 3, 4 years. The value of that stock might have gone up quite a bit. In those situations, oftentimes it makes more sense to either borrow against those stocks and or just take a student loan, because for every dollar of stock you sell, you may only be getting back 90 cents because 10 cents has to go to pay for the taxes on that appreciation. Um, and depending on the exact structure of your stock plan, it might be even greater than that. So all of those things considered, we generally say, hey, think about your tax basis before you start selling stocks. There might be smarter options like borrowing against it or um, taking a student loan that might be more affordable. What we generally also encourage you to think about if you're thinking of borrowing against your stocks is like the timeline for repayment. Student loans generally are what we call deferred, so you don't have to pay until much later, after you've graduated. Versus when you borrow against your stocks, you often have to start paying right away, or they'll just keep increasing the balance within increasing the balance of your loan, which is fine as long as you don't get margin called. So again, just be careful when you think about these strategies. And we're happy to have one-on-one discussions with anyone if you want to, get into specific numbers, what your portfolio looks like, and things like that. Okay. And lastly, this is a slide we added recently after having done a version of this presentation for maybe 3, 4 years. We added this slide in, and it's really based on talking to members who are now 5 years out of their MBA programs, right? And what they say is like, hey, I was so focused on paying off the loan really quickly, the student loan really quickly, and minimizing the size of the loan. I totally forgot that at some point I want to buy a house, right? And if you're living on the coast, it's not unusual to buy a $1 million+ home. And in that case, delaying that purchase by even a year is like 40 grand in just the purchase price based on annual average appreciation, plus another, how much ever you spend over the next 15, 20 years in terms of interest that accrues on that extra 40 grand. So it's kind of like, don't be penny wise, pound foolish. If you foresee purchasing a home soon after graduation, um, it might make sense to make sure you have at least enough of an asset base to get that purchase done at the time you want to do it, right? Obviously, this is it's like so far out there, it's really hard to plan for these kind of things. But we share it just largely because of the conversations we've had in more recent years where folks who've only prioritized paying off their loans have not um, have not developed an asset base that they can use for a down payment on a house, right? So the other thing I like to share, and this we started sharing this because folks we speak to in one-on-one conversations are often stressed about the amount of debt that they're taking on. What we found is like post-graduation, many people don't feel that stress. The repayment is excellent. But they do feel stressed when they are borrowing that money. So what are you looking at over here? This is kind of the distribution of how much people are borrowing. And you can see, like what is it, 48%? Am I doing that math right? 16 plus 12, 28. Yeah, okay. So like 43% of the class is borrowing more than $80,000 per year, right? And these numbers are conservative because oftentimes people borrow an additional $20,000. This is based on Juno data. This does not include federal borrowing, and oftentimes people are borrowing an additional $20,000 from a federal loan option. So, the correct answer is somewhere between 43% and 59% of borrowers are borrowing above 80K. So I guess the thought, what I'm hoping I'm trying to convey is it's not unusual to borrow a pretty substantial amount um, as you're going through your MBA programs. Um, this so let's just pause there for a second. Any questions as you think about how much you might be borrowing or how to get to a decision on how much you need to borrow for your programs? And this becomes a lot more real after admission. I understand some folks on here might be admitted, but most are probably pre-admission. Um, when you start seeing those cost of admission numbers, etc., that's when all of this gets a lot more, tangible and executable.
We have a somewhat related question about what is the average amount a student typically makes during the course of their 2-year MBA, and is it enough to sustain survival expenses?
Yeah, I don't think so. I I'm just gonna answer that question anecdotally. I don't have data to back this up, but I would guess internships are, ranging from a few $1,000s a month, so maybe like $10,000 um over the summer, right? To perhaps on the high end, up to 35,000 in the over the summer. Other than that, at least for the full-time MBA programs, right? There's not a lot of folks who are like doing part-time work or fully employed, etc. That does vary by school, right? In certain communities, there might be a little bit more of a culture of doing some part-time engagements. Some very, very small minor, like I think I knew two people in my class who had a business that they were running alongside doing their MBAs. But this was not like, let me start a new business while I'm in my MBA and make it successful, right? This was, they came into the program with an established business and they appointed a general manager into the business and they kind of just, kept an eye on it. So we've seen a couple of folks do that. I had one classmate who did call it consulting for some folks, while not like McKinsey, Bain, that kind of consulting, more so him as an independent consultant working based on past relationships he's had. It's pretty rare for full time for substantial employment through the school year. It's really in the summers when you see everyone doing those internships, and again, that's a very wide range of outcomes there. I would say 10-ish to 35,000 is probably average. Is that your experience, Andrew? Do you feel differently?
Yeah, I think that's on point. It's hard to I think be able to, again, in a full-time program, have the time to dedicate to earning that amount of money that would sustain your expenses. Obviously, everyone's different, but I think the expectation is you'll need additional capital.
Yeah. Okay. So I see a great question here. Are the borrowing rates school dependent? That's a great question. So the federal loans are not school dependent. It's just the number on the slide is the number for fall 2025 and spring 2026. For fall 2026, we'll find out the number roughly in May 2026. We'll find out what the number is going to be for the next year, but it's the same number for the whole country. Um, and it's not even specific to MBA, it's like just any graduate program. In terms of private loans, it is dependent on each individual application, right? And if that lender is deciding to base it on which school you're going at, then that could be a criteria that they utilize. We don't see it, we have access to many lenders' underwriting criteria. We're not allowed to publicly discuss the exact underwriting criteria, but I'll say the school, generally speaking, the school plays less of a factor, the individual plays a larger factor in most underwriting criteria that we see. Okay. Um, so one of the things to understand, especially if you've spoken to any of the folks in prior classes, historically, the way it worked was the federal loans had an option for you. They had two options. The unsubsidized loans that would be for the first 20,500, a little bit cheaper than the Grad Plus loan. The Grad Plus loan would go all the way up to the cost of attendance, but it would be a little bit more expensive. Um, Starting 2026, the Grad Plus loan is no longer going to be an option. If someone's already in school, right, if they enrolled last year, that's fine. They're still going to have this option. But someone enrolling in fall 2026 or later is not going to have the option of the Grad Plus loan. So what this means is if you're borrowing 20,500 or less, you can choose between borrowing a federal loan and a private loan. If you're borrowing more than 20,500, you have to have a private loan as part of the solution. And the first 20,500, you can decide whether you want to borrow from the federal or the private. Okay. So that's kind of, what the options are going to be for students coming in. And this is when I talk about federal loans, obviously it's very specific to uh, US citizens, US permanent residents. For the private student loans, um, it is applicable to, of course, that same group, but also international students with a US cosigner. Okay. Um, so we kind of discussed this already. For the first 20,500, you can choose between federal and private. Oftentimes, if you need like public service loan forgiveness, or if that's going to be a valuable feature, you're going to pursue a career where public service loan forgiveness is, sort of part of the plan. For example, a MD, MBA, or someone going into the nonprofit world, this might be a pretty attractive feature. And for that reason, you might say, I'm just going to take the federal loan. Um, Private student loans, generally speaking, if it's you're going to apply, you're going to check your rates. If it's more affordable than the federal loan, then you might take it as long as you don't need those public service loan forgiveness or income-driven repayment plan features. Okay. And then again, if you need more than 20,500, there's really no option other than using some private loan. So for the first, starting next year, 20,500, that's kind of the federal cap. And then more than that, it has to come from the private market. Okay. So I'll stop there for a second. I see a question here. How can international students without a cosigner get a manageable loan and deal with this issue? So I think of it as I'm thinking about my classmates who did this, right? Many of my classmates, international students, borrowing north of $100,000 each year, graduating with $200,000 plus in debt. Um, they really live the ramen lifestyle post-graduation and aggressively attack paying off those loans. One of the good things is we have been successful in refinancing loans for international students without a US cosigner. What that means is you take a very expensive loan, let's say it's 12%, 13% interest rate when you first take the loan. For the 2 years that you're in school, interest is accruing at that very expensive rate. But once you graduate and if you've accepted a job in the US, making money in USD, oftentimes there's a possibility to refinance that loan into a much, much more attractive interest rate, 5.5 kind of interest rates right now for people who are, graduating in 2025 and doing that. So that's often the strategy, right? It's make sure I take a job in the US during the 2-3 years following the MBA. All your savings are going towards paying down the loan, and you are refinancing into a more affordable rate as soon as you can. So that's the strategy I've seen international students without a US cosigner take. It's very expensive. The strategy I would suggest is try your best to find that cosigner because it's a much easier path if you can. So I want to talk a little bit about Juno's success historically in getting, the massive adoption across the MBA programs, right? So this is a slide I like to highlight over here. Lender 1 and Lender 2, these are sort of, I'm not going to name lender names, but these are the largest lenders in the market. Together, they have greater than 70% market share. Since essentially I'm saying if you need a private loans and you don't know about Juno, the odds are you are going to end up with one of these lenders. Okay. And we looked up their publicly disclosed data to figure out the average rate that they are charging borrowers. And these were the numbers that came out, 11.44 and 11.32%, which is, in our opinion, extremely expensive. Juno, on the other hand, the called roughly, I need to pull the exact number. I pulled this out of memory, but in the sevens is our average rate from the last, 2025, everyone who borrowed in 2025, starting fall 2025 and the second years for fall 2025. So the difference is like 4%, right? Which is massive. We ran the numbers for a typical loan, which is like $70,000 loan amount, 10-year loan term, fully deferred for while you're in school. The difference was $27,000 over the life of the loan, which is it's a lot of money. So I in this way, I think we've been phenomenally successful in doing that. And some people say like, hey, I don't like averages, right? Average. What does average mean? What does it mean for me? This is what I like to think of it as like it's pretty ubiquitous that members have this experience, right? Like 99% of members got a rate below 9%, 82% of members got a rate below 8%. So, not everyone, but almost everyone got a rate below 8%, right? And this is for a 10-year fixed, fully deferred loan, which tends to be a pretty popular choice amongst borrowers. And lastly, we do run what we call a rate match program to figure out if someone could get a better rate outside of Juno. And only 5% of people were able to find a better option outside of Juno. So in this sense, like from an interest rate perspective, if you are a US citizen, US permanent resident, an international student with a US cosigner, it is next to impossible to find a better option outside of Juno, at least historically. And this has been true for the last 7 years. Then you might think, oh, yeah, this is true only because, it's very hard to qualify at Juno. That's not true. It's the opposite of what it is. Our MBA members have extremely high approval rates, 92%, right? And so essentially, if 100 people applied, 92% of them saw rates, and out of those 92, 82% saw a rate below 8%. Okay. In terms of applying with or without a cosigner, we are very unique in this regard where more than a majority of our members, our MBA members, are not utilizing a cosigner. So they're just applying by themselves, no parent, no spouse, no one else on the loan other than themselves. And they don't have any income when they apply. Oftentimes, let's say, they already quit their job or they are doing it, they didn't take a job for their internship, they decided to work on their own startup, etc. Right? So it is extremely, yeah, it's a very, very attractive product. And really the reason this exists is because MBAs do well in their careers And Juno has been able to convince lenders that, hey, all the MBAs are coming to Juno for their student loans. You guys need to provide a really attractive option that meets all this criteria that we put forward to them in terms of really broad eligibility. And they agree to those things to basically get recommended by Juno. Okay. Great question over here. How does Juno charge fees? So when our members take a loan through any of our negotiated deals, Juno will charge the lender a fee. We do not charge our members any fees whatsoever, and there is no origination fee on the loans themselves. So the loans don't have, the lender is paying us a fee for essentially because their marketing costs are dramatically reduced by working with Juno. I don't have a slide here, but 50% of Juno's members come from word of mouth, basically talking to each other. Folks telling their classmates about Juno is 50% of our way of getting in front of students. And then the remaining 50% is through partnerships like the ones we do with Forté, where folks who have the best interest of MBA students in their mind are working with us to figure out how can we, further the initiative. The last thing I'll add about what we were successful doing in 2025, and we expect to continue to do in 2026, is if someone did find a lower rate elsewhere, which happened roughly 5% of the times, Juno would match that same rate exactly and give 1% of the loan amount in addition to that. So from a financial perspective, it was essentially impossible to find a better option than Juno, because even if you sort of theoretically found one, we would just match it and give you 1% extra on top of it. So hopefully that speaks to the capability of what group negotiation can do. We've really been able to maximize the value we've been able to extract from lenders and transfer to our members through this group negotiation process. So as a kind of I've hinted at it, so let me just talk about it officially. Before Juno, folks are reaching out to a variety of lenders, checking their rates, getting multiple hard credit checks sometimes, and trying to find, what is the most attractive option for them. Other times, students don't even shop around. They just like go to the first option they see and just assume the rates are going to be similar everywhere else and just move forward with that. Um, and like I kind of shared on the previous slides, it can be pretty dramatic difference between different lenders. Post Juno, really since 2018 for a lot of MBA programs, we come together as a group at Juno. We go to a variety of lenders, we make them negotiate and get them down on interest rates, expanded eligibility criteria, and then we make that option available. When that option is available, there's no commitment anyone is making to use that option. We just negotiate that option, make it available, and then students are still going to shop around, figure out what's best for them. However, 95% of the times they find that the option that Juno negotiated is the best option that's available. Okay. So where are we for next cycle? Because I think that's what this group is most interested in, right? So now through April 30th, 2026, we are just encouraging people to join the group. Just sign up. It's like joining a mailing list, well, a data hungry mailing list, but it's like joining a mailing list. You tell us a bunch of stuff, and we keep you informed as we are negotiating with lenders. By May, we'll have the lender selected. By June, we'll make that loan option available to you, and you can apply for that loan and see if you like it, right? Last year, about 3,600 folks from the incoming class were excited about this and joined the group. We hope to see the same or even a greater participation this year. Our goals, gigantic rate discount for everyone. We want everyone to get a lower rate than they can get by themselves. I'll clarify that sometimes people think we provide one single rate for everyone. That's not the case. Everyone gets their own rate based on their credit worthiness. The general idea is if you have an 850 credit score and you're getting a 5% interest rate somewhere else, we want you to get a 4% interest rate at Juno. If you have a 700 credit score and you're getting a 9% interest rate somewhere else or 11% interest rate somewhere else, we want you to get a 7% interest rate at Juno, right? So that's kind of what we are doing. We fully expect rates to be below the federal student loan options. That way, if you need to borrow, you might borrow the full amount. There's no fees. Juno doesn't charge you anything. The lender doesn't charge you anything upfront. Just interest is what they charge. And we have our rate match guarantee that we hope to continue. So what we encourage you to do now is go ahead and join the group, right? Join juno.us/Juno-webinar, or just use that QR code. This will encourage, we go to lenders and we show them the size of the group, right? And we tell them like, hey, this is the size of the group. That's why you should aggressively participate in our process. And so that's why we encourage people to sign up in October, November, even though you're, several months out from actually borrowing at this point. Yeah, so let's focus on questions from there. Hopefully that didn't become too much of a sales pitch about Juno. My hope is I have communicated that, Juno has done well historically in getting the best options for our students, and we need your help to do that again. Andrew, shall we tackle some questions?
Yep. All right, we got one. Do you have estimates of how long on average Juno applicants pay off their loans? And that's including the variance due to the loan amount.
I do not have like a file that I can run an average across and segment it by loan amount. Anecdotally, what we've heard is 6 to 7 years is sort of the and even the lender is making that assumption when they give the loans, is that these loans are not going to last for 10, 15 years. It's 4, 5, 6, 7 years.
Well, we have another one on can international students without a cosigner apply for a Juno loan?
So historically, we have not been successful in getting what's called a negotiated deal, right? Something that's better than what you can get by yourself. For international students without cosigners, we are happy to connect. We are happy to share what options we know exist for international students without a cosigner. We are happy to, basically be a sounding board and help you figure out what's the right solution for you. But in terms of the kind of deals that I've been talking about for the last 5-10 minutes, where it's heavily negotiated and it's something better than you can find by yourself, we have not been successful in doing that historically at Juno. We were successful in 1 year, but since then that program has shut down. So it wasn't particularly successful, as you can imagine.
And we got another one. It was a question from earlier about Canadian residents going to a Canadian university and how Juno might be able to support.
Again, very similar in that regard. We encourage you to book a one-on-one call with us. We're happy to, understand your concerns and then figure out, what options are available. I would say Canadian residents going to a Canadian university, we probably have less context than even you might have. Really the first stop for help there would be the school's financial aid office, reaching out to them and say, hey, where have the students who've come in prior years borrowed from? And they should be able to share a list with you. And then researching that list and understanding the various terms of those lenders, we are happy to help in that regard and essentially be a sounding board to help you think through that decision. Yeah.
All right, we got two more popping in. First one is, does cost of attendance include rent, groceries, insurance, gas, utilities, etc.? I'm also a single mother and need to pay for childcare. You mentioned cost of attendance can raise. Who determines that?
Great question. So yes, cost of attendance is meant to include rent, insurance, gas, utilities, groceries, all of these things. Um, if you're a single mother, you want to make sure you share that information with the financial aid office and ask them to raise your official cost of attendance. The way student loans work is you apply for a student loan, you get approved, you sign the documents. After you sign the documents, it actually goes to the university for a process called certification. So the university's financial aid office will receive the details of your loan. They will look at it and they will either say approved and send me the funds on XYZ date, or they will say no, XYZ person is trying to borrow more than they are allowed to borrow, therefore do not give them this loan, right? Um, so the person you need to convince is the financial aid office in terms of increasing that cost of attendance so that when the loan certification process happens, they are looking at that higher cost of attendance and approving the loan for the higher amount. Um, so hopefully that's helpful. And what I'll add is, dependents are a very frequently um, utilized way of increasing the cost of attendance. In fact, if I scroll up here to the second slide, you'll see there's multiple columns here, right? And the increasing cost is largely due to the family size, right? So as a single mother with needing to pay for childcare, you can certainly appeal to um, the financial aid office about that.
Next question. Is the only loan window September going from fall to spring, or could someone starting their MBA in January also get great rates and options by applying now?
Yeah, you can absolutely. So Juno makes sure there is a loan option available year round, regardless of when you need to apply and do it, right? So all of these great things I was talking about, like stuff we negotiated for 2025, where is it gone? This stuff, right? This is active on the website right now. So you can go to joinjuno.com, just hit sign up or register or something like that, and follow the steps, and you should be able to access this deal like today. You can have a loan done by in 20 minutes from now.
And we have, how do you go about estimating travel costs, additional costs beyond the tuition housing? In your experience, does this sort of change based on B school you end up going to?
Yes, absolutely. It does change based on the school you end up going to. There are schools that have a lot heavier, call it travel component, social component in terms of the social life that happens at that school. I generally, I'm broadly categorizing here, but I generally like to think of it as some of the larger programs, some of the more highly ranked programs tend to skew towards being more expensive on the median in terms of travel expenses and social life expenses. Some of the smaller programs, some of the, beyond T15 programs, they tend to be a little bit more budget friendly in terms of the. I'll give you an example, right? Because this is I think stresses some people out in terms of like, hey, am I going to have a good experience if I don't have that budget and I go to one of these programs, right? And I will share that absolutely 100%. Everyone is having a great experience, regardless of their budget, or at least that's how it comes across to me. Um, Having lived through it, right, and having spoken to thousands of MBA students, the it's just the choices you make, right? So, for example, a weekend is coming up. There might be a group that's planning, we're gonna go to Turkey for 3 days and come back. And we're going to stay at the fancy, Ritz-Carlton over there. And then another group that's going to say, I'm going to go skiing and it's going to be a road trip. We're all going to jump into a car. We're going to share one Airbnb over there. One trip costed $200 a head. One trip costed $2,000 a head. And both groups had probably equally amount of fun, right? and created the same kind of like relationships with in terms of bonding. So I think I wouldn't stress in that regard. I was a guy who used to love board game nights, and I think I did all right. So, yeah.
All right. Thank you so much for all of the questions from our participants. Really great engagement. And for our presenters at Juno, thank you for all of your expertise. I do just want to remind you all that are here, if you have questions, please feel free to reach out to our team, pre-MBA@fortefoundation.org. If you do have those questions about any of the work that Forté is doing or the programs that we have available for you. And again, thank you so much for your time today. I hope you all enjoy what's left of your day.